We're going through it again. We have the experts in the field, have told us that things are going to continue. So, what are your thoughts, Dr. Kirk Elliott? And thanks so much for joining us. Last minute notice. You're pretty much getting some stuff done, and so I'm glad you could join us.
Well, it's my pleasure, and it's really exciting because our firm is busier than ever.
Wow!
Like literally since 2002, when I got into this industry, I've never seen this kind of activity by a level of maybe 2 to 2.5 times greater than even the Silicon Valley Bank crisis, right? Which is the busiest I've ever seen it in this industry, and this is easily double that. So, and what's exciting to me is, even though January 30th you saw a 30+% decline in silver price. And then that following that was on a Friday, and then the next Thursday it was down another 20%. Maybe one out of all of our 40,000 clients was calling wanting to panic sell, and I talked them out of it, right? But everybody else in all of this flurry of activity, they're buying, which is a testament to all of your viewers, all of our clients that understand that when prices come down that quickly in like 2 days, it's a manufactured thing. It's not real. It's not the market saying, "Oh, this is over," right? It's like, because in a normal speculative bull market where things have topped out, everybody is selling, locking in profits at the top. That would mean it's over. This one, everybody's buying, which means nobody believes the nonsense that's going on, right? And so they're buying on the dip, which is what all of us should do. So, we've been talking a lot over the last 2 years, you and I, about how silver's outperforming and a potential ratio trade, locking in your profits in silver going into gold. Well, when do we think that's going to happen? I think, prior to January 30th, the ratio was 45 to 1. I thought, okay, we're within like 2 weeks of pulling the trigger on a ratio trade. Because once it got to about 40 to 1 silver to gold ratio, I was doing it. But that's not the only piece to the puzzle, right? The ratio is one of them. The second is, what is the momentum in the market? Because that's what when you look at charts, it's momentum that's causing it to like go straight up. And when we saw silver going up 5 to 7% per day, it's like, I'm not going to pull the trigger on a ratio trade, not when silver is like outperforming that much. So that will resume. Why? Because supply and demand hasn't changed. There's still no supply, massively high demand. And what we saw was just banks covering their short positions. That's what caused this downturn, right? So if the fundamentals change, it's like, yeah, this bull run's probably over. Far from the truth, right? And so how do I know? So a couple different reasons. Number one, you look at what the price of silver is today. On COMEX, it's $78 an ounce. What's China offering silver for today? What are they willing to buy silver for today? Well, the answer is $123 an ounce. 123 is what China's offering when silver at COMEX is 78. So I'm going to use my fingers for math. You go 78, 88, 98, 108, 118. We're literally about $45 over spot is what China's paying. Now, in a normal market, you should not have that spread. In a healthy market, that arbitrage is going to compress itself and come back to normal almost immediately. But it's not. So what does that tell us? China is willing to pay almost any price because they're out. That's supply and demand, right? So to me, moving forward, this is going to mean prices are going to go up robustly, right? In time. Now, next 2 to 3 weeks, we might still have a shaking out, right? Massive volatility. You're going to have huge upswings, huge downswings. And the people that bought on a huge upswing, when it comes down the next day, they're going to say, what did I just do? I lost everything. No, you didn't, right? Even because I think we're still going to hit 150 by summer,
Mm-hmm.
and much higher than that, 200, 300 plus by the end of the year. I mean, I'm not God. I don't control the markets. I don't control the momentum. But based on where we are now, that's what I would expect, because there's no supply and there's massive demand. Now, let's look at a little bit of the timing, right? So I think that we will execute the ratio trade from silver to gold, the first half of it, let's say by summer, and then all of it by the end of the year. And we'll want to be out of silver into gold and take advantage of gold's outperforming by that point, right? So I've said that for a long time. I think we're going to be done with this bull market in silver. I don't think silver is going to stop growing. I just think ultimately gold's going to outperform it, right? So I think we're in a multi-year bull market in both metals. Yeah. But David Morgan, he's been analyzing the markets much longer than me. He's like a silver kind of guru analyst. He said just recently, a couple days ago, that the silver bull market has around 1.5 years left in it. Okay, so what did he just say without actually saying it? He's actually confirming what you and I have said, right? That silver should kind of peak on this bull run, I think, by the end of this year. He's saying a year and a half, right? So, okay, we get to take advantage of this massive overgrowth or outperformance of silver, right? So I want to look at something different, though, because as all of your viewers know, you're more of a technical analyst than I am. Like I'm fundamental analyst, right? Mm-hmm. I look at the things that cause the charts to look like a chart. Well, when you look at the charts and you look at the fundamentals that cause those charts, let's look at something really interesting that's never happened before, like ever. So COMEX options expire with about $2.3 billion in open interest, right? So inventory over the last 24 hours on COMEX is down 27.4 million ounces. Okay, so that means metals are leaving COMEX and going somewhere because people are wanting exchange for physicals. They're wanting physical delivery. So when that discrepancy is happening, when they've got that much leaving and China is paying $45 over spot, you know that there's unhealthiness in the markets in the sense of this is not normal activity. And when COMEX is running out and people are wanting physical delivery, the prices are going to go up, and they're going to go up a lot, right? So, because to me, everything always boils down to supply and demand in the end, always. So I was watching this video from Ray Dalio. He spoke at the World Government Summit in Munich, Germany over the weekend. And he was talking about, and I love Ray Dalio. So those of you who don't know who he is, a billionaire hedge fund investor, started Bridgewater funds. And if you read his books, okay, they're thick, they're heavy, they're deep. It's like, okay, not normal reading, right? But he said there's 5 big forces shaping the world order right now. I mean, this is a paradigm shift from paper to physicals right underneath our nose, right? As the old guard is kind of putting up their uniforms, hanging them up forever, and there's a new guard that's about to take place, right? So what are the 5 forces that are causing this change from central banking as we know it, fiat-based money as we know it, the geopolitical concerns as we know it? So number 1 is money and credit and debt operating machine, right? So that's the economic cycle. It's breaking down, right? So let's put it into individual terms. If you or I spend more money than what we make over a period of time, we're going to have to file for bankruptcy, right? Same with companies. Well, same with countries as well, unless they have a printing press, right? So we're entering into this point where the economic cycle is over. And he states that these 5 things that we're going to go over basically change once in a lifetime for people.
Wow.
So it's nothing new, but we're not going to see it every day. We're going to basically see this kind of paradigm shift once in a lifetime. The second big force shaping the world order is the political cycle. As we go into debt and we don't know how to pay it back, you've got political forces on the left and the right, the populists on the left, the populists on the right, that start fighting with each other on how are we going to take care of this debt. And some say, let's raise taxes. Let's say, let's just print money. Either way, there's a political group that's infighting. So you've got economic crisis, you've got political crisis. Now you've got the third thing, which is a geopolitical cycle. So that is basically the world order, the IMF, the World Bank, the International Monetary Fund, reserve currencies. Like this whole geopolitical cycle, the world order has been dominated by the US dollar since 1945. Right? So there's a change here. And reserve currencies never last forever. So what is he saying about this geopolitical cycle? He's saying, and I agree with him wholeheartedly, we're moving from a multipolar world to a unipolar world. Meaning these globalists and the United Nations, these financial institutions, they're polarizing together to create a global order and get rid of the things of the past, like the US dollar being the world's reserve currency. Well, they want a global reserve currency right there. It's just a change. So there's three big things. The fourth one is just simply acts of nature, where we've got droughts, floods, pandemics. That's caused more deaths than war has over the last couple of decades, which we can't control it well. Maybe some of those are manufactured, right? But generally, it's just another big thing. Now, the last one is technology. So technology is a big one that we haven't really had this force shaping the world order in the past. So technology can be very disruptive. And a lot of people think, oh, AI is going to be great for profits for companies because it's going to actually increase productivity and lower costs, but it also displaces jobs. Right? What else does technology do? It changes the way, the disruptive nature of like banking, for example. Instead of the SWIFT banking system, what if you have XRP and on a unified ledger, you can for very quickly, almost instantaneously, and for very cheap, provide for cross-border payments.
Yep.
Right. Okay. Or any, you could name that disruptive nature with almost all different cryptocurrency, blockchain type things. Right. So it's disruptive. But what's also disruptive about technology is governments can use it for nefarious reasons.
Right.
Right. Just as like companies use it for their profit, it displaces jobs, but now countries can use that same technology to actually control your spending, control when you can access your money. So this is all these five forces are reshaping
your behavior.
Yeah. When you control your spending, you control your behavior.
Yep.
Right? Because it's like, well, we're not going to allow you to tithe to a church that we think is speaking hate speech.
Exactly.
We're not going to let you donate to a political party that we don't like. We're not going to let you buy meat when we think you should eat bugs. We're not going to let you buy naturopathic type medicine when we want you to have prescriptions, right? I mean, you name it.
Yep.
If anything that they want, they can actually control. So you ultimately can use technology to say, we want you to participate in the system. And if you do, we're going to give you your universal basic income. And imagine all these retirees and people on Social Security and everything saying, if you don't participate in the system, you're not going to get your payments anymore. How many people are going to not comply? It's going to be difficult to say, but I bet most people ultimately do if it means getting or not getting your income. Right? I'm not necessarily talking about your viewers. I'm talking about the nation as a whole.
Yeah. I mean, we had 70% of people, get vaccinated. and they had to, a lot of them, because they wouldn't get paid, they wouldn't be able to do anything. So there's still a lot of control, a lot of capabilities out there, and the monetary system is definitely one of them. So the way that we've been encouraging people to break free from that is to acquire silver.
Mm-hmm. So. Absolutely. I mean, what's weird is, so if you go in deeper into this, I don't know, 20 or 30 minute speech, however long it was, by Ray Dalio at this Munich summit, he talks about how do investors protect themselves, right? And realize he's a billionaire investor, one of the most successful hedge funds of all time. What did he say? He said, we have to start looking at gold as a permanent part of a person's allocation. Because when in times of crisis, in times of a changing of the world order, you need to look at gold the way that central banks do, as a hedge against inflation, as protection. Now, people will say, well, Kirk, we can't do what central banks do. It's like, you can't? Sure you can, just at a smaller scale. You don't have to buy tens or hundreds of tons of gold. Just buy 1 ounce at a time. Buy silver, in increments of $500 or $1,000 each, right? It accomplishes the same goal, just at a different amount. You can play the same games that these big boys are playing to protect and preserve and grow and thrive, right? So then we have to say, okay, I get Dalio's perspective, right? I understand it. I philosophically agree with what he's saying 100%. So where are we going, right? He kind of explained history and where he thinks we're going politically, economically, socially, and so forth. But is it the right time? Because people call me every single day and say, Kirk, January 30th, silver was $118 an ounce, and now it's 78. Is it going to keep going down? It's like, I don't know. But what Dalio's, I mean, probably not is the answer, right? But in this volatility, you're going to have a huge up day, a huge down day. But I think we've found this inflection point of, I don't care what the day-to-day fluctuations are. You should get in, right? Because moving forward, I think it's going to be in triple digits. And he said the same thing. He said, don't worry about the day-to-day fluctuations. Worry about how much of a percentage of your portfolio should you keep in metals permanently?
Right.
Permanently, not just as a trade, like most investors think. It's like, okay, this is just a trade for now. No, he's saying permanently, because the world financial structure is changing. So all of us, that number is going to be different, whether it's 20% of our portfolio, 50, 80, 100, whatever makes you feel comfortable when you put your head down on the pillow at night. What I would tell you is you can't over allocate into the best asset in the world, the most in-demand asset, I would say, outside of oil, right? So when you look at the importance of silver, oil is used for everything, right? And so silver is right up there with it. In a new digital economy, it's needed for AI, it's used for cryptocurrency mining, solar power, electric vehicles, nuclear, you name it. It's right up, all electronics, like the flat screen TV behind me. Imagine a world without silver. You can't, just like you can't imagine a world without oil. So when you invest into invariably one of the top 2 commodities on the planet that's needed for everything, you're going to do great when it starts to run out. And you know what? It's starting to run out, like we talked about earlier on in this show. Mm-hmm. Now, one of my favorite researchers, I mean, he's brilliant, is Jesse Colombo.
Yeah.
He has the Bubble report. And I look at his stuff all the time. I think he's a very, very smart guy. So remember, Michael, how maybe it was 3 or 4 months ago, we talked about the cup and handle formation in silver.
Right.
Which was, if you were to look at it on a chart, it looks like the Big Dipper, right? You had a price point, it came down for a long time, came back up. And then once it reached that inflection point, it's like the handle and it goes through the roof. We saw that, at the end of the year. Well, we saw the beginning of it, not the end. We saw the beginning of it. So at the end of 2025, Silver closed at $71 an ounce, and it got up to 118 by January 30th. So 71 to 118 in literally a month. Okay, so that's the beginning of the handle. Then you corrected some, and it's going to keep going on. Now you look at gold; it's got the exact same formation that silver had 4 or 5 months prior. Right? It's a cup and handle formation, which means what? Gold is about to explode. Right? So now we've got this double whammy of both gold and silver in a massive explosive tail of a bull market as it starts to enter that handle. So let's look at what Ray Dalio said. Gold is going to be, should be a permanent part of anybody's portfolio, right? You look at what central banks are doing as there's a changing of the guard away from central bank fiat-based money printing as we know it, geopolitically, politically, economically, everything. Now, all eyes of the world are going to start to be on metals. Well, why are we in silver rather than gold? Because it's simply outperforming. You go back to the original story that we talked about, how, okay, this gentleman thinks silver is going to peak out 1.5 years from now. I think by the end of this year, that is massive overgrowth and outperformance of silver over gold. This is why we're going into silver right now, to take advantage of, right, I think, which is the move of a generation. Don't look at the daily.
I saw somebody chart out the last time silver popped back in 2011, and the same pattern is playing out again percentage-wise. So percentage-wise, it went up like 140 something percent, 48%, whatever it was, like it did last year. The next year, and we're looking at the same pattern, it went up over 400%. So Jesse Colombo was saying he's looking at $500, and I'm in agreement with that, and you're in that ballpark as well. Once we hit that point, I agree with you. It's time to roll over into gold, because we're not going to see the same massive percentage increases that we're seeing probably this year in silver that we're going to see in gold going forward. So you've called it all the way from the beginning.
I mean, like anything, let's just say you're running a race, right? And you can't go full steam for the entire race. At some point, you get exhausted and you get tired, and you still might be running, but your speed slows down. Ultimately, silver is going to have that same mechanism, right? So you're going up, up, up on a chart that's going parabolic. It's almost straight up. And then the curve starts to flatten. So it might still be growing. It's just growing at a slower rate. Well, at that point, because gold in this cup and handle formation is trailing silver, ultimately gold is going to outperform silver. So we just want to take advantage of both, be in the right place at the right time. I don't care which metal it is. I never have. I just want to be in the one that's outperforming the other one. And so here's where we then get to take advantage of something that we can control our finances. We can't control politicians. We've never been able to. Right now we can vote with our feet. We cannot vote for them. We can blah, blah, blah. However, they're going to make decisions legislatively, with executive orders, with administrative rulings, depending on the president, right? Where it starts to affect things. And ultimately, markets just get overbought. They just get tired, right? So it's human nature, because if you think about it, when silver is $200-300 an ounce, people say, "Oh, it's been growing a lot, but I think I might want to go into gold now," right? Once it gets too high, the appetite starts to change, and the growth, it might still be growing, because I think we're in a 10-year bull market in both gold and silver, except silver's just going to start to slow down. Even though it's still growing, would it make sense to stay in it? Of course it would. But what if gold starts to outperform? Well, then I want to be in gold, right? So we're just taking advantage of these geopolitical, political, economic shifts, maximizing our return while minimizing our risk, and being in the right place at the right time.
Yeah, fantastic. So there's definitely a way to get involved in this and to make the switch like we're talking about. And I think being involved with you at KEMP.com is definitely the way to go. Your group has been helping people. Everyone, myself included, that's involved with you has absolutely enjoyed and has benefited massively from your guys. I would say love. So you guys have loved on us very, very well. And I think that, your group is very much like that. So I would highly recommend continuous. So I see people in the chat say, I just can't afford silver anymore. You can't afford the ounces that you were buying before, or you just don't have the money. I can understand if you don't have the money, because whatever price you were paying before for silver, if you're with Dr. Kirk Elliott, you just send that same amount, and it's going to give you the same percentage increase going forward. So don't look at the number of ounces that you get. Look at the money you're putting in, and that money is going to grow exponentially, going forward.
I mean, yeah. I mean, $1,000 now, when silver was $28 an ounce. I mean, what would that get you? Like 30 ounces. Now it gets you about 10. But you know what? It's still $1,000. It's still going to grow at the exact same percentage that you were talking about. So don't look at it as how many ounces can I get. Look at it as, how do I protect and preserve what I've worked so hard to accumulate? Right? I mean, what are the other options? You keep it in cash. The dollar's on the verge of a great devaluation. Like literally, I think the third leg of a massive devaluation. And we see those from time to time. It's like none of this that I'm talking about is anything new, right? It just happens over time. There's long-term cycles that happen. And when you look at long-term cycles right now, the commodity cycle compared to the S&P 500 is at a low, meaning the commodities, whether it's gold, silver, steel, coal, whatever, they're at this low point compared to the S&P 500, which means they're going to grow. When they were at a peak, well, I can tell you when the peak was. We had one in during the Great Depression. We had one during the oil crisis of the 70s. It was at a peak and it came down. When it's coming down, you want to be in stocks. When it's at this bottom point, you want to be in commodities. It is at a 15-year bottom point, right? This is where, even though gold and silver have skyrocketed over the last few years, technically speaking, we're at the bottom of a long-term super cycle in commodities compared to other assets. Take advantage of that. Literally take advantage of it, because, and that corresponds as well as what we've said. I think we're in stage for a 10-year bull market. Well, the commodity super cycle is about 15 years. Right, we're right there. Take advantage of what I believe is the bull market of a generation to participate in.
Yeah, generational, definitely. And the manipulation goes back a long way, guys. We look at the JFK assassination. After his assassination, they stopped with silver coins. 1964 was the last silver coins. And they did away with the silver certificates. They even said that if you had those, they would confiscate them or some silliness or whatever.
Yeah.
So they have really ridden hard on silver, and that's being broken now. And that's why you're seeing these incredible upswings. Now, when the dollar does start to go down on a pretty significant basis, I believe, every time that happens, commodities go up. So you'll see silver and gold go up very significantly. And when it goes up, silver goes up to that incredible level that we're talking about, hopefully. We can't guarantee anything, of course, but if it does, and I believe it will, that's going to be the time frame where if you're with Dr. Kirk Elliott, you can just make that easy switch. Otherwise, you got to go down to your local coin dealer and sell at whatever price you can get, and then, or transfer it over to gold.
Yeah.
Take the silver and turn it into gold. It's much easier if you do that with a phone call or an email. I do everything by email. I just get everything done. Don't need to talk to anybody. Just wire my money in. Tell them what I want them to do with it, and it's done. I get every month, how much I have, and it's fantastic. So easy, very easy. And at some point when I want to convert some of that to cash and buy other things, which will be I think we're going to see a lot of things, crash, like the housing and stock market and so forth. It's going to be a buying opportunity. If you have massive profits, which you very likely will with silver and gold, then you're going to be in a multi-generational opportunity event.
I agree. And it's so easy. So like you said, just reach out to us. You can go to kepm.com/Jaco, or just call us at 720-605-3900. St. Michael sent you, and we'll take good care of you. We'll answer all your questions and help you strategically map out your financial future by allocating into physical, tangible assets, just like what Ray Dalio said to do, right? He's finally catching up with our advice. Even though he's a billionaire investor, he's catching up with what we've talked about for years.
There's some other billionaires that bought massive amounts of silver several years ago. They're in unbelievable profits, and will be the rest of this year. And I would think, just like you're talking about, they'll probably convert it to gold.
I'm sure they will. They're not stupid. They're not billionaires because they're stupid.
All right, Dr. Kirk Elliott, thanks so much, and thanks for coming in at short notice. And hope everybody got some good advice, and we'll see you guys next time.
Sounds good. Bye-bye.